S&P still rejecting a key level. Nasdaq making a lower low for the first time in 7 days. Stocks teetering on major support. Consumer discretionary actually leading the index today. Beaten down names such as Lulu, Ulta are finding support and leading the rebound. What the cumulative advanced decline line of the S&P is telling us about the probabilities of our pullback and how deep our pullback will be when it occurs. Tesla continues to run after hours. We're going to explain why. NVDA making an extremely bullish pattern, making all-time highs, while AMD drops, and what the SMCI partnership with AMD is actually telling investors. FedEx imploding overnight and what that means for the economy. We have a ton to go over. Let's get into it. Hey everybody, welcome back. So what we're going to do first and foremost is let's just talk about the ES, and let's drill into this on a 5-minute chart and just get into the details and see what's really happening here. So I'm going to leave this 200 in. So I'm going to suggest that you might want to put a 200 in your chart right now and just watch how the stock's acting towards it, right? I use a bunch of different metrics. I use metrics as tools. There are times to use certain ones. You don't use the same tools for the same time all the time, right? If you're hanging drywall, you don't need electrical tools or plumbing tools. Well, if you're me, you might not know the difference, but you get it. So if we just see how the ES, which is the S&P futures, is respecting the 200 SMA, it might be something that we want to watch. Why are we doing that? And we are seeing some rotation now. I did point this out today in the pre-market live that we do every single morning, and you might want to watch that. By the way, thank you to everybody for sharing that video I did on Saturday. It was a long one. You're going to see how that correction ties into this one and what we were talking about with the correction and the pullback and what the advanced decline line is actually telling us about what I said there about how deep the correction could be. I'll link that video at the end, and you can go through the timestamps on that video. It'll be in the description, so you don't have to watch the whole video. You can just go to it if you haven't seen it yet, but you're going to want to watch that portion of the video. It's pretty telling. So we're just going to clone this right here, and this is the hourly, and we can see how that fits there. Always clone your lines. It gives you a truer channel. So if you take a look at this, we're pretty much boxed in there, right? And this was something that I noted today as well. For us, one of my key metrics and where I am medium term with the market are my cloud formations. I'm not going to really bore you with what they are or how I created them or any of that right now. Maybe one day I'll do a video on it. But what I want you to take away from are the following. You see down here, you've had this long, beautiful green, long-term cloud on the hourly ES until today. And now you're fighting it. And you can't stay above it, and we're turning. Now, do we turn like this, or do we turn much steeper? Remains to be seen. I don't know if we're going to do this, right? No one really knows what's going to happen, right? So I don't know what we're going to get, but I know that it's not shaping up to be bullish yet. Now, these are the levels that if you want to watch the S&P, or if you trade futures or you trade options, you're going to want to pay attention to what I'm about to tell you. You're going to want to watch this 20 EMA on the hourly. You see how we've been respecting it? And I'll blow this up for you so you can see this, okay? And you're going to want to subscribe to this channel because what we go over is actionable, actually intel that you could use to make better decisions the next day. If you're a trader, if you're new, you're going to want to follow along. So if you can see where we're at right here, right? We rejected that 44.61. And then what happened after that rejection of that 20? Well, it just kind of set the tone, didn't it? And then we just kind of traded down. Now you can see how we're rolling right in here, and we're just unable to get above that 20. We have a yellow cloud, and this is your smaller, shorter term time frame cloud on the hourly. And you see how it flipped here? Well, once that flipped, it never came back. Now, people could say, well, you could just use the break. Yes, you could just use the break. That's one data point. The issue with that break is you don't know how substantial that break is. Is that break going to get me through a bunch of levels, or is that break going to get me through to here and then bounce and go higher? We just don't know. What we do know is that we are in a downward trend on the hourly, on the S&P, and we are breaking through levels and having a really tough time here. Now, the depth of this correction, we're going to get into in a little bit there. I don't know how deep this gets, but I have a better understanding of how deep I think it's going to get now. And I'll get into that in a moment, but I really want to just hammer this out. You're going to want to watch these levels tomorrow. You're going to want to watch that 20 EMA on an hourly chart, right? You want to know when you're unable to get above something. And since Friday at 2 o'clock, you are not getting above that level, right? So even if you just put that in your chart on the hourly, you're going to want to watch it. When you come in tomorrow, you'll have some more data points, obviously, with the evening, but you want to watch that 44.37 level, okay? And really, to get above any of this, if everything was static, for this to flip again, we really have to get above that 444275, right? So just to make it easy, since you're not going to have these clouds tomorrow, and if you're not in the Alpha Chasers community, let me drop this down here and move this here. Just to make your life easy, just watch that wick tomorrow. Okay, 44450. Just watch that wick. You can see it was rejection city over and over, right? You can see that right here. And then over that, you're going to want to watch this big down bar that just happened here. It shook everybody out at 4 a.m. when Asia opened and had access to our markets, rather. So you can see that right there. So they would be the key levels that I would be watching tomorrow. I would not rule that out. I do not think, get rid of these clouds for a moment. I do not think that we're in free fall. Okay, I do not feel that way. I do not think that that is where we are going here. And I'm going to get into why I feel that way in a little bit. And this video will obviously be shorter than the Saturday video because I know people work and you're just trying to disseminate information a little faster. So I appreciate all your comments. I do read them. So we should talk about the NQ and forming a little hammer up here. And I think that's somewhat pertinent, right? So we're forming a hammer. We could have broken down today. It's a great day to break down. You have no reason to go up. We had zero leadership, and nonetheless, we broke down. Now, what's important about this bar? A couple things. First and foremost on this bar, we have an open, and then we have a lower low. When's our last lower low? Haven't had one since back here. So I'm going to want to pay attention to that for one, okay? Number two, I'm going to throw this in as a 20. I'm going to make it an SMA. And I'm going to use open, high, low, close. Okay, we're just going to leave that in there so you can kind of see our trajectory. And then we're going to come down to this one. And we're going to put that in there. But that's going to be, I'm going to do open, high, low, close. And we're just going to do a 10 just to split the difference so that we can see where we're at. We could see where we could come to pretty easily, right? And test. That's where we've been testing since this cross happened, right? So we could see that. We could see 15. That's not the end of the world. You're fighting this level right here and you're not breaking it. So I don't really see a reason to get that out of shape. And we're going to go through a couple of the sectors here, but that level doesn't get any clearer on what you need to get above. I mean, that is beyond glaring, right? And that's the type of flim-flam that we're talking about here, where they're taking us up, making us think that it's going to run, and then they're just sweeping the legs. Now, what's interesting about this is the breakdowns are not real breakdowns. And I'm trying to figure out, the depth of why or how much we're going to drop. Now, if you watch Saturday's video, I do believe that we're in a long-term strong market. I don't want to get into the economy in the comments. I get it. We can talk about the economy, and I'm going to go through a couple things with the economy that I think people need to focus on. But what we're going to do is we're going to focus on price, and we're going to look at this just over 15 minutes. We can see where the rejection is, right? So if we reject it here once, twice, 3 times, I feel like the Count of Sesame Street. So if you see that, right, and how you're here, and we can't get above that, well, that's 15.2,750, right? So what you're going to want to do is watch that tomorrow. 15.275.75, right? I'll stop using my shorthand lingo so you can see where we're at right here, right? And then you can see how there's a flag right here that's setting up. So you have a flag right here, okay, under resistance, which this is, right? And then you can actually see this level coming straight across, can't you, right? So we can actually see a level and where support, right? Let me just drop it there. Support has become resistance, right? Well, that's not going to make me feel warm and fuzzy if we think we're going to push, but we've been talking about some kind of pullback on Saturday, so it is realistic. But let's talk, we're going to talk about that in a little bit here, but you see how you're boxed in here? I would watch these levels I have marked off here. These would be my levels that I would watch, and you could snapshot them or write them down, 15.2, 34.25, and then you're up here at this 15.2, 75 area as well. But you're forming a flag. Whatever way this breaks, is how you're going to break. I'm not adding a tremendous amount of value there, but you get it, right? You break to the upside is kind of the way that I would be leaning, but we'll discuss that in a moment here. What we did notice with the SOX is that we didn't really break down to the level we thought we would. Now, I say 500, but there's another level in here, and we did close below that level, and that doesn't make me feel too great. I'm just going to go back a little bit so you can see something, okay? How far back I'd actually have to go, right? So I still want to pay attention to this level. I do think it's substantive, and I do want to pay attention to 500. I will say this, if you are shorting this market, you're getting extremely frustrated unless you're shorting rips. And then even those rips, you're shorting almost blindly. I'll go through a couple different names here, but just to get into it, looking at the SOX, these would be my key levels. I need to get above that 505, and this 499 held for now. And we'll see what tomorrow brings. But that leads us to a couple things that we need to bring up. Number one, NVIDIA. Okay, why would NVIDIA push after hours on bad FDX information? And why would it push after SMCI just said that they're going to be in a partnership with AMD, right? Why would that name be the stronger one out of the group, and you'd see AMD a little weaker and SMCI a little weaker, okay? The reason for that is demand, okay? Everybody is going to want a NVIDIA chip. They're going to want their processors. They're going to be in demand. They're selling them on the black market. You can see that China is actually getting them through an intermediary right now. That's how in demand the chips are. If you go and look at any of their chips, they're marked up about 20% on eBay right now. So everybody wants NVIDIA chips because they are the best. Now, how long and how far in advance NVIDIA stays remains to be seen. If you think about the fact of what you need, whether you need a 3 nanometer or 5 nanometer setup, right? And then you think about who has that, right? Well, who has that? Well, that's Taiwan Semi. Okay, that's who has that, right? They're the axe with those kinds of high-end chips. Now, Samsung's getting into it, but they're not up to it yet. My dark horse is UMC. I think that they get involved, and I think they get involved with AMD. But it's really expensive to ramp this stuff up and get it up to speed. Well, that's where like ASML comes in, and these companies, the lithography, right? You need all this stuff. That's why we were in Lam Research. You need the suppliers, right? You need the testing equipment, AEHR. You might want to run through those names. I just went through super fast for you there. As I stated, you get a lot of actionable information and things that you can dig into here. So here we are, and here's NVIDIA, right? So NVIDIA is up on this news. The reason NVIDIA is up, in my opinion, is because people are understanding that these chips are going to be in massive demand. There is no real reason why SMCI would want another supplier if they were getting everything they needed from NVIDIA, since NVIDIA is the cutting edge. It's really just that simple. Don't overthink it. Now, if you look at NVIDIA in this breakout, we did fairly well batting this around today. I had actually 4 adds to it and did quite nicely, but off the open, and we're seeing this a lot. And what I would suggest to people, if you're trying to stay in these names, if you're trying to day trade, you're going to have to drop your time frames down massively. If you're not day trading, what I would suggest that you do is go start looking at hourly charts. They are extremely telling, in my opinion. For example, let me go through this and I'll show you what I mean. So we did this off the open, or I should say I did it off the open, and I don't know if anybody followed me in the room. Usually they do, but this is the chart and this is what I did. So I liked how that we had 1, 2, 3 down, right? And this is one of those candlestick patterns from that video I did. And then we flipped right here, and I liked that higher high. And then I'm like, you know what? We're not breaking this low. So this got really interesting. I'll show you. So what wound up happening here is See that hourly chart? Now here's that hourly on a 5-minute. Remember I just said you want to zoom out the hourlies, right? They tell you everything lately. I would really start looking at hourly charts. They're being extremely helpful. So you start seeing this nonsense, right? And then you had a couple other indicators I used, but this allowed me to know like, okay, well, we're holding here, so we might continue to hold. And I added a couple times and I did quite nicely with it. I have stock and calls that I've been in for a while, actually, the stock. I added new calls today, but nevertheless, if you look at how this is acting, this is setting up to be an absolute monster trade. And I know people keep thinking that, oh, it's going to pull back, it's going to pull back. I'm going to give you a real quick way that you can learn how fast your names are actually going to pull back. But before we get there, let's get into Tesla, okay? And I do want to say one more thing about NVIDIA. You know, let's stay on semis for a second, and then we'll flip back. This is ugly. Okay, this is the weekly on AMD. This is ugly. You don't want this. You don't want to keep getting to the same level and seeing these rejections. Now, on AI, okay, we went from that 81, 82 level. You all remember the earnings, right? That earnings call, and then it just didn't go well and we sold down. And since then, AI has just ripped the stock up 50%. I'm not saying their partnership with Microsoft or SMCI or their conference is, you know, not great. I mean, in my opinion, I think that there is a place for AMD. I'm not saying that. What I'm saying is that this had a substantive move out of the gate. Okay, so again, here's the move on AMD, right? And we know what fueled that. The NVIDIA fueled that. Well, if you take a look at NVIDIA over the same exact kind of move and time frame, you can see the move that we've had, and you can see how we're still responding to it, hitting higher highs, right? So this is something that I think people need to just keep in mind. So here we are, and we're going to talk about Saturday's video and the RSI just a little bit. So we're over 80, and you can see where we're at there, right? So now we drill into the daily, and you can see that we're already starting to roll and point down, and it's just starting, right? I don't know if we're going to break all the way down. I don't know if we're going to get to 70 and bounce off again like we did here and then go up, you know, $20 on the Qs. I mean, that's what we did last time, right? We bounced off the 70 line and we went higher, and that got us 5.5%. I don't know what's going to happen. Let's get rid of that for a moment. So what I do know is that we're overextended and we gave back from 82 to 75 today. So this is relative strength, and you're gonna want to watch this for a minute. And I just want you to get this concept because you can do this with any of your own trades. And it's a really quick back of envelope way to say, okay, how am I doing today, or how are my stocks doing? So we're going to get rid of this, and we're going to get rid of the moving average. And all I'm going to do is just show you today. So if you put all these in a graph and you just look at how you did on the day, the Nasdaq's dropping, okay? The SOX is dropping. Tesla's up 5%, NVIDIA's up 1.9%. They're your leaders. Whether you want them to be your leaders or you want something else to be your leaders doesn't really matter, right? These are our leaders. For example, I thought Oracle was going to continue to push. That was my belief today. My belief coming into the market today was that we were going to see software have their day in the sun. I was wrong. Software did not have their day in the sun. Software names sold down, right? So I have two choices. I can tie my ego and say I'm right, or I can say software's not working. I'm going to go buy what's going up versus what's going down. So just keep that in mind. The way that I'm explaining this and telling you to put this with the index, the corresponding index that you trade, this will save you a tremendous amount of heartache. Unless you're a massive pullback buyer, but let's be real about that today. Pullbacks did not work. I tried an AI pullback. I got very little love there today, and you could just see that the easier money was just made just following the trend, right? I tried a CVNA pullback. That didn't really work, okay? I'm not saying that these names are done. I actually kind of like CVNA going into the KMX quarter, but we'll get into that later. So if you do this, what I'm suggesting, what you'll note is that you'll be able to determine the relative strength very, very easily and for free. You won't need to use anything like MarketSmith. You just see where your stock is versus the relative strength of the index over the corresponding period of time. That's all you need. So CVNA, I would not rule out. I still like it going into the quarter. Keep that in mind. Now, I would be remiss in a couple things here, and I do want to explain why I think the pullback and then the magnitude of that pullback. So, but before I get into that, FDX, I don't really want to get into the quarter that much. They missed, okay? Packaging's down, it's weaker. There's a reason for this, and I just want to walk through this very, very quickly. I would think that Amazon drops on this. It's not dropping, okay? So what does that tell you, right? It tells you a lot, quite frankly, that this is looking at the past, this isn't looking forward, but they lowered guidance, and they lowered guidance by a lot. So I would watch this tomorrow. It would not surprise me to see one of these days where we gap down $5, $10. UPS has done this before, where you gap down, like this was a bad one, but you'll see ones where you'll gap down and then literally you'll reverse and wind up gap filling. FDX would not surprise me with that, but just be aware of it. The economy is shifting, and we're shifting away from manufacturing and we're going into services, and I'll explain what I mean by that. So this is USMPMI, right, which stands for United States Manufacturing. Now, they only show this data on a monthly chart, okay? So what I'm gonna do here, let me pull this over here, and what we're gonna do is split this up. And then what I'm gonna do down here is I'm gonna click on the US Services PMI. And what you're gonna notice, and let me just sign this up so that we're looking at the same time frame. Perfect. So what you're gonna notice is that there's a disconnect here. And that disconnect is that manufacturing is dropping, yes, but services are going up. So if you look at the peak here in September, we dropped off. Well, we're above that peak in September. Why? Corporations are buying services. People are buying services, right? That's what's happening now. They're not buying goods as much as they are buying services. You have a service-driven economy, and that's what's fueling the market. So the fact that like FDX drops, it's really not the end of the world. I can get into this on Saturday. We don't need to spend an inordinate amount of time on that. There's a ton to go over. So I would also suggest that start looking at these kinds of names. This is a name that we're playing around with, doing quite well with. Start looking at these kinds of names, these beaten down names, the Altas, the Lulus. Some of these names just look like they're gonna absolutely rip. Alpha's one we bought in the Alpha Chasers community. We paid $99. I do get your emails about being on the wait list and not getting an invitation yet. An invitation will be going out either tonight or tomorrow to the next group of people. Please look for it. Once the invitation goes out, you have 5 days, and then you just cycle back through the wait list. But if you look at like ELF, right, and you look at these names, like these are names we're in, 284, we're in race. Like, it's not the box names that you want to be in, right? It's not the targets. Like, they're not going to work as well, right? That game's over. Walmart's your winner. It's very clear that Walmart has won. You want to be in the names where the people have to use that product, right? Like Louis Vuitton. I mean, these names look phenomenal if you look at them on long-term charts. Like, they look absolutely phenomenal, right? If you take a look at Hermes, which a lot of people, they don't really look at these names, and I get it. But if you start looking at these names, they look absolutely phenomenal, and they've just been on an absolute tear. So I would not rule them out at all. Now, in regards to retail, I do think that retail can cycle through, and retail's been pretty beaten up, and it is something that we want to pay attention to. The one thing that I always pay attention to is XLY divided by XLP. And the reason I pay attention to this is because XLY is our wants, XLP is our needs. You need Clorox, you need to wash your clothes. I hope you wash your clothes. And then you might want that new iPad or whatever you want to buy. So if you look at it from that perspective, right, when this starts breaking out and the relative performance of wants, well, that means I've got a much stronger economy than people think that you have. Now, if you look at the PMI and you look at FDX and how people are going to look at that data, that's one thing. But relative performance is everything. I can't stress that enough. Like, if you take one thing that I do, it's relative performance. Understanding this will take you light years ahead of people. If people are buying more of their wants than they're buying of their needs, the economy's in better shape than you think it is, right? you might want to just remember what I just said there. So let's get into this, because I want to get into this because of what I said this Saturday. I said on Saturday that we're going to have a pullback or correction. It's probably going to happen in the next 1 to 30 days. The average depth of that, the last 8 of 9 of that indicator have led to a 4% correction. I just want to say something here. I think it's possible to correct, and some names are still going to hit highs. And I think we saw that today with a couple of names we just went over. But I want to explain what you're looking at here. This is the S&P cumulative AD line, okay? S&P cumulative AD line. And what this is, and why I think that this is important, is because what it does is it's a cumulative number. It's not just a number, it's cumulative. And I just want to point out some things that are probably very obvious, but you can see right here, this little peak right here, and you can see how we're over that peak, and you can see how that if we use this level right here, that this is the highest that we've been since September. And you can see right here where we're at, right? That we are nowhere near that. That is called a positive divergence. So I have a positive divergence on the S&P cumulative AD line. Now, I have a positive divergence where I'm hitting all-time highs and the market's not at all-time highs. Does that sound like an environment where we're going to have a major pullback? No. So I think the pullback is going to be a little muted. And this is something, candidly, that pushed, okay? And it pushed recently, and they back, it takes a week for this data to load in. So this little move wasn't actually there. So I just want to go through what this is. And this is actually, let me just give them credit so you know where I'm getting this. I'm getting this from Sentiment Trader. They created this. I subscribe to them. It's a decent service. I have no affiliation with them whatsoever. But I think it's important always to understand what we're looking at. The time frame, this is for a medium term. So you're looking for your guys that are swinging, day trading, a little bit of the day trading, but you're really looking for the swing trader position person, right? And the data comes from Fidelity and Bloomberg, but let's talk about what it is. The cumulative AD line takes into the daily net number of advanced minusing decline issues for the index, and it adds the previous day's total or subtracts, okay? Simple enough. Cumulative, it keeps adding to it. For those that watched the last hour chart that we used to look at, same exact thing. It is common to spot divergences between the breadth and the underlying index. We just did that. If the index is trading at a new high, but the AD line is below that new high, then it's considered a negative for stocks, lack of participation. Conversely, if stocks are making a lower low, but the AD line is rising, then that's considered to be a good sign. Historically, stocks have done well in the year following a new high in the advanced decline line with a lower drawdown than when they see it at not at a new high. Okay, so I have a new high here. I have a market that is supposed to pull back, right? We've discussed that on Saturday. I'll link that video at the end. And at the same time, I'm not hitting new highs. That is a positive divergence, something to think about. Now, just let me slide this back over there. I got a new monitor, or it's a monitor that I've had for a while. It is a little more advanced, and if you could comment on it, let me know what you think. It's one of those 4K monitors, so it should be a lot clearer. I just hooked one of the computers into it, so just you have to let me know. Anyway, this news with Rivian and them switching it's okay news, but it tells the battle is over. And I just want to, I put this comment out on Twitter, and I'm just trying to get people to think. Okay, if they own all the charging stations and we're going to have more EVs than anything else out there, right, in the next 20 or 30 years, which seems like we're leaning that way, right? They're going to own all the gas stations. So if you think about it from that standpoint of like, well, what's the new gas station? What's these charging stations? They're the new gas stations, right? Well, they're going to own the standard for all the gas stations that are out there, or all the charging stations. Now, whether they lease them, keep them, get all the data from all the EVs, I don't know what he does with it, but I can tell you for sure that him controlling all the supercharging stations all across the US, I believe that Europe and Asia have a different standard. I can almost guarantee you that that is not baked into the price of the stock, nor is it baked into analyst models. So something to think about. That's it. Have a good night.